Welcome, my name is Vishal Tekshanani. Today I'm speaking to the Chief Executive of NAB, Andrew Thorburn, and we're going to cover the bank's first half results, the Royal Commission and how NAB is transforming itself. Andrew, it's great to have you here. How are you?
Thanks, Vishal. I'm good and it's good to be with you.
Thank you so much. So Andrew, let's kick off with the first half results. What did you feel were the highlights for NAB?
Well, look, I thought it was a pretty solid result in a very competitive and turbulent environment. Yep. Our revenue was up, and I think particularly pleasing was our business and private division, which of course is the core of NAB. Yep. It had 1.8% sequential revenue growth, which was positive. Our costs were in line with what was expected because of our acceleration program, much bigger investment in the bank and therefore higher costs for the half, but in line with expectations. Our bad debts or a credit impairment charge remains quite low, and we now have a $500 million, what we call forward-looking adjustment, sort of like an extra provision that we've set aside for potential, credit charges in the future. And our capital at 10.2%, we feel is within striking distance of the 10.5% we need to get to by January 2020. So I think all things considered, we felt it was on track. Pretty solid result.
Okay, so let's focus on the dividend. So NAB has announced a 99-cent dividend, and that's the rate that the dividend has been maintained at for the 9th consecutive profit result. Now, like any business, NAB needs to balance rewarding shareholders with investing for the future. And on that latter point, you flagged an increase in investment expenses through till financial year 2020. So when can shareholders expect to see the benefit of that investment translate into dividend growth again?
Well, we are investing a lot more, Vishal, you're absolutely right. We feel that as we look into the future, it's a challenging future, but it's also got opportunities. And a bank is a long-term business. It needs to invest. And normally we invest about $1 billion a year. Yep. And over the next 3 years, we're going to invest another $1.5 billion to take it to $4.5 billion. So a very big investment, but it is about setting the bank up to be simpler, more resilient, and more growth-oriented for the future. We know the dividend's important, particularly to retail shareholders. Yep. And we have maintained that at 99 cents. And the board has said it intends to maintain that for the next half, so we have a continuation of the FY17 dividend in FY18. But of course, future dividend growth is into the future. But we know that capital generation is good for the bank. We know that risk-weighted asset growth has been low, or growth in our credit aggregates has been low. And so we know that people want that to improve, but we just have to invest, get the platform right. And the dividend yield, of course, at current levels is quite attractive. And with franking credits, we still think it's worthwhile using those up, and we still have quite a bit left. So all in all, we're monitoring this carefully, and we know that shareholders want to see the dividend improve. Sure. But what we need to show is that we're building a platform that's a strong, efficient, growth-oriented bank into the future.
Okay, so let's delve deeper into that investment piece. This is something you've emphasised quite a lot over the past year. What will NAB be able to do in 3 years? How are you reshaping your business for the next 3 years?
Well, the first thing is we're investing in what you would call the platform and foundations of the bank. Technology, risk capability, our systems and architecture that deliver confidently for our staff and then for our customers and for our regulators. That's point one. The second thing is we are simplifying dramatically the bank. We have decided to divest MLC. Yep. We've obviously done a number of other divestments, so we're back to Australia and New Zealand. But we're going to halve the number of products that we have on offer, and we're going to reduce the number of IT applications by at least 15 to 20%. So we simplify the bank dramatically. What that enables us to do is to focus on growing our business bank. We're the #1 business bank in Australia. Look at housing credit starting to slow, business credit starting to lift up, and the future is in private sector businesses. So our business bank will have more bankers, we'll have an even better specialisation model, and we'll have more representation on the ground. So I think growing the business bank is a really big investment opportunity. So that's where we're going to be investing to make the bank not just simpler and more efficient and more resilient, but also poised for growth.
Okay, so let's park the results for a second and come to the Royal Commission. So clearly the public perception of the banking industry has been dented a bit by everything Australians have seen and heard during the hearings. So as a senior leader in the industry, as the CEO of NAB, what would you say is your key message in a nutshell to the public, to the community, to NAB shareholders and customers about what you're doing to reinstill faith, not just within NAB, but within the industry by and large?
Yeah, well, I've been in banking my whole career, and it has been disappointing to see what's happened, particularly the last 5 to 10 years in banking. And we have to own that. You know, we have to acknowledge that we have not always delivered for customers and for the community, and we have to rebuild trust through actions steadily and progressively over time. Making ourselves a simpler bank will mean that we can deliver for customers more consistently than we have in the past. A lot of our mistakes have been driven by very complex product and architecture systems, and so we're going to address a lot of that. And then we just have to be transparent around when we make a mistake, that we acknowledge it. I can't say that we'll never make another mistake, because it's just a very big, complex, fast-moving business. But when we do, we want to acknowledge it, tell regulators about it, acknowledge it to customers, and fix it so it doesn't happen again. I think the only other thing I'd say to investors is you need to have perspective.
Sure.
The bank is strong, it's profitable, it's got very good asset quality, and it's got really good businesses. The Royal Commission is into misconduct. Yep. So as a result, all you're going to see is bad things. But that is not systematic in the bank. There are people in the bank who are hardworking, who have very good character, who want to do the right things for clients. So if we had a Royal Commission into good conduct, I think it would go longer than the one that we've got into misconduct. So I think we just have to have a perspective here and zoom out and see there's a lot of very good things that the bank does, and it will continue to do.
Okay, so speaking of simplification, let's come back to the results. So another important element of the announcement was that NAB is reshaping its wealth management strategy. So can you explain to shareholders what exactly is happening here, and why is it that you've opted to retain these two specific businesses, which are NAB Trade and JB?
Well, we looked at this carefully and thoughtfully over time, and we still believe, firstly, that wealth products and services and advice to our clients are very important. Yep. But it's focusing on particular client segments. So obviously JB Were, which is the premium advice franchise that we have and one of the leading franchises in Australia, sits alongside our private bank and the many high net worth business clients that we have. So that's why we have that. Also, NAB Trade we think is a really good platform. We've built it out, it's grown its market share, and we have confidence that as we continue to do that, it will provide a very good platform for some high net worth clients who are self-directed and others who are confident, knowledgeable investors, and that number is growing in Australia. However, we have decided that the remaining part of the business, the MLC business, that we will divest that. That will be better for NAB because we're a lot simpler and our returns will go up, we think, once we do that. And it'll be better for MLC because it'll be a smaller, independent business, more nimble. It's got some good platforms. It's got some opportunities for growth. And I think separating it from NAB will enable them to go after that as well. So that's why we're doing it and what we're doing. Now, we have said that it's going to take us probably through the end of 2019 to be able to conclude all that because it's quite complex. But we've got a clear plan. We've announced it, and now we need to get on and do it.
Andrew, thank you so much for coming in to speak to me and to speaking to NAB shareholders on the NAB Trade platform. Really appreciate your time.
Thanks, Michelle. Great to be with you.
No problem. I hope you found that video informative. Now, please remember what we talked about today is just general information. It's not a recommendation to transact in NAB shares. If that's something you wish to do, it's really important that you do your research and consider seeking financial advice so that you can get the help in making an investment decision that's right for your circumstances. My name is Vishal Texnani, and I'll see you next time.